Good evening, friends. How are you doing? Can you guys please confirm if audio is okay? We can start then. We can start first session today. Today's session, I'm going to keep very basic, guys, because most of you are doing the first time. Whose first lecture is today? Who's doing it for the first time? How many people's first lecture? Nidhi, Amit, 2 people raise their hands. Okay, many people's first lecture. Okay, no problem. So guys, I'll keep the lecture very basic first, so that I'll just explain you what is IRS, what is the basic terminologies for all of it, and then gradually I'll scale it up, right? Part 3, any which ways, is not going to be that much difficult. Also, it's more theoretical from that sense. So you should have a basic understanding about what we have done in the part 1, what we have done in the part 2, because there are a lot of references are going to come of the part 1 and part 2 in the part 3 also. Okay, so let's start this. Okay, part 3. Let me see if the recording is on. Part 3, which is going to be your representations. It's going to be practice, and it's going to be procedures. Part 1, part 2, which we have already done. Part 1 is going to be individual taxation. Part 2 is going to be business taxation, or I can say business entities. First part is all about the individual taxation, second is going to be the business, and third is going to be all about how, if you are representing your client in front of IRS, what are the things you need to take care of it, what are the matters you need to deal with it, what is your roles or your responsibilities. All of it is going to be covered in the part 3 itself. Okay, whenever we talk about the enrolled agent, right, whenever we are talking about enrolled agent, that means when we talk about here the US tax, in this case US taxation, in this case I'm just talking about the federal income tax. I'm just talking about the federal income tax. I'm not talking about the state tax. I'm not talking about the state income tax. I'm not talking about the local income tax. I'm not talking about the county income tax. I'm not talking about the city income tax. Just the federal. Federal is, in a very crude when I can say, it's the central income tax I'm talking about in this case. Again, in the enrolled agent, we are not talking about any kind of sales tax, any kind of VAT, any kind of the real estate taxation, or anything property transfer tax. We're not talking about that, right? So we're just purely and purely talking about the federal income tax. That's all. Because possibly it's just not possible for you to remember so many taxation for the 50 states. US has almost a 50 states, so you cannot possibly learn the income tax of the 50 states itself. So we're just focusing only on the federal income tax, the center income tax we are following in that case. Okay, besides that, in our course I'll keep on discussing other taxation only, not only limited to this only, but other category also we are going to discuss it. For example, we will discuss the federal income tax. We will discuss the sum transfer tax. For example, gift tax. For example, state tax. What is gift tax? What is state tax? For example, A is giving gift to B. Whether should it be taxable or not? What amount should it be taxable? So we are going to talk about this. Or if the A die, then the property of A go to the state of the, in this case, state of the A, and when it goes to the beneficiaries, the state has to pay the tax on it. That's called the state tax. So we'll discuss this also, we'll discuss this also, we'll discuss this also. Okay, so federal income tax we are going to talk about. We are going to talk about the gift tax, state tax. Then we are going to talk about the FICA, Federal Insurance Contribution Act. Then we're going to talk about the Medicare tax. So just like in India, if you are contributing to the PF account, for example, if the employee is contributing to a fund, in India, employee is contributing to the PF. Similarly, the employer also contribute to the PF in that case. In US, we call it FICA. Similarly, if the employee is contributing for the Medicare tax, the employer will also contribute to the Medicare tax. You don't need to worry about any of the taxes right now. Any of the taxes, you don't need to worry about this, because all of it, if you're doing it first class, don't worry, we'll discuss it much more detail in the part one itself. So don't worry about this. In fact, none of the taxes we are going to read in the part 3. In the part 3, we are just going to do the procedures only. That's all. Any question up to here, guys? Are we going a little fast? Shall I slow it down? Is that okay? All right. Sure. Okay, moving on. We will have almost totality. We'll have 10 classes. So the total classes we'll have is 10 classes. And one class is going to be your revision class, where I'll revise everything in that one class itself. I don't know, Snidhi. I think this says you have to check with the VGLD team. I have no issues with that, but it's just like this class is getting recorded for your offline viewing purposes. So if anyone's mic is on or some other problem would be there with that, this recording is not going to be good quality. That's why the IT team does not let anyone open that their mics. So that later on when you're seeing it, you should not get bothered by the others' voices and everything in that case. But still, if you have any propositions like that, you feel free to shoot it to the team. Okay. Before we start, guys, so we have in totality totals, I was saying the 10 classes, and one class is going to be the revision class. We missed 2 classes, but don't worry, we'll have a replacement class for the same, so don't worry on that case. 11 classes, that's going to be sufficient for us. In this class, in the part 3, it is going to be extremely boring, so I'll keep on mix and match. So I'll do the concepts first with you, then I'll do a lot of MCQs practice with you, so that it will remain little interesting at least. Because if I keep on dumping the theoretical portions on you, you will not find it challenging, you will not find it interesting at all in that case. So I'll keep a good blend of the concepts, theoretical portion and the MCQs itself in that case. Do we need to prepare anything? No. So I want, guys, people who have done with me, they have already aware of it. I don't want you to come prepared at all. So no preparation is required, guys. So it's better you come clean slate, don't read anything, because if you're coming with so much of preconceived notion, it is going to hinder your process of learning. So please come clean slate, that should not be a problem. But please revise whatever we have done it would be great if after the class 15 minutes, 20 minutes, half an hour, just give some time for your revision if it is possible. If not, you can see everything over the weekend also. That would be a good thing. Last thing I want from your side is going to have a higher engagement in the class. So anything which you're not able to understand, please ask me. Any query which I'm posing to you, please be responsive on that case. Else is just like watching a YouTube, which with the one-way communication only. Else you will not find that much value of it, right? So to get the maximum value of the online classes, it's much better you be involved in the class. Any query which I'm posing to you, any question which I'm posing to you, be responsive on that case. Only then you can make this class more fruitful. Otherwise, it's just going to be It's just going to be the recorded lecture only. Okay. Can we have a better lecture engagement, guys? Can we have a better engagement? Okay, engagement is so. Okay, thank you. Thank you so much. Okay, so I'll briefly cover the both the portions. I'll cover the part 1 and the part 2 also, so that when you're reading the part 3, in that case, you should be aware of it. So people who have just finished part 1 with me, kindly bear with this, so that everyone is on the same page. When we talk about the individual taxation, guys, that means when we talk about the part 1, which is the individual taxation. When we talk about the individual taxation, that means we are talking about just like you and I, anyone who is just an individual, and we are talking about the individual taxation only. It could be income, could be your wages, income could be interest, income could be dividend, income could be you are a partner somewhere, any income could be coming in that case. So part 1 is all about the taxability of that individual only. There is a one format which we use a lot, which we substantially use in the part 1. I will share that format with you, so that it is something which is going to be pretty much a guiding force for us for understanding the various concepts of the part 1 itself. Let's see this. How do we do this? So this format would be helpful if you guys can copy this. Gross income, gross income reduced by adjustments. Okay, when I say gross income, guys, I am including all the income. So that means all the interest is going to be included, wages is going to be included, dividend is going to be included, rental income is going to be included, everything is going to be included in that case. Don't get confused with the Indian taxation, where we say this is the income under salary head, this is the income under other sources, this is the income under other sources, this is the income under high property. No, don't get confused with the Indian taxation, right? Therein every other income is going to come, every other income is going to come under the gross income. Okay, from this we are going to reduce the adjustment. What is adjustment? Adjustment is certain category of the deduction. Adjustment are certain category of the deductions. These are the deductions, right? So there are few deductions which are allowed by the IRS that you can take that you can claim when you're claiming the gross income. You can reduce these expenditure, right? So this adjustment is nothing but the expenditure for which you are allowed some deductions. From this will give us the adjusted gross income, which is also called AGI. From this, we are going to reduce standard deduction / itemized deductions. So that means you cannot claim both. That means you cannot claim both. You can take either of that. You cannot claim both. You can claim 1/2. You cannot claim both. Which one would you prefer? Whichever is higher or whichever is lower? Which one would you want to? Higher? Why higher, guys? Why is that higher? correct? Because higher deduction, that means the lower taxable income, that means lower the taxes. Absolutely. Good. Absolutely, Nidhi, is going to be lower. Okay. Okay. This is adjustment. Adjustment is also called deduction to arrive. Deductions to arrive AGI. To arrive AGI. Because these are the figures you are reducing so that you can arrive at AGI. Standard deduction and the itemized deductions is called the deductions from AGI. These are also called adjustments are also called above the line deduction. That means before this line. Any idea what this will be called? Random guessing, whatever you think. Correct. That's called the below the line. From this, we are going to reduce section 199A deduction slash, it is also called QBI deduction. This will give us taxable income. Please let me know once you're done noting. QBI is qualified business income. Whenever you're done, please let me know. Okay, see, most of it, this portion, okay, gross income, adjustments, standard deductions, all of it I'm going to cover in part 1, right? Whenever you do the next part 1 lectures, you're going to do that with me. This is though ideally it has to be the part of the part 1 itself, but it has not given much in your book, so I have covered this in the part 2 lecture itself. Some portion of this I have covered in the part 2 lecture itself in that case. So when you're doing the part 2, you will do this with me. When you do part 1, you are going to do this with me. Okay. In the part 3, we are not going to do anything in that case. Okay. Is just for your referencing only, for your making you understand, because we frequently are going to use the terminology, say gross income, say adjustment, say standard deduction, say itemized deductions. You should understand what we are talking about. Only then you'll be able to fully grasp that. Okay, after the taxable income, guys, what we do after the taxable income, just writing here hash, continuing to the next page. So on this taxable income, we will calculate the taxes. Generally, the tax range is 10 to 37%. It's the slab. It's a progressive slab, just the way it is in India. It's just the progressive slab. So that means if your income is rising, you have to pay more taxes in that case. So on this, you will arrive at the tax. Which tax are we talking about? State tax? No, we are talking about federal tax. In fact, very precisely, if I say federal income tax. From this, we'll reduce some tax credits. These are also called the deductions from, taxes. Plus, in case there are any other taxes, for example, we discussed FICA, Medicare, you will add that. Then in case you have made any payment, like say withholding tax, any kind of in the way we call it India, advanced tax, or the estimated taxes you have paid it, all of it you will reduce, and this is going to give you taxes payable / refund. It's the federal income tax. No, I didn't get your point. What are you saying? Federal income? No, it's a federal income tax, I'm saying, Diksha. Whenever you're done. Okay, now coming to this portion, just a little more explain this point. Let's say the federal income tax is $5,000 and tax credit is $2,000, right? So let's just say the tax liability is $5,000 and tax credits is $2,000. And let's say there is no other taxes, there is no withholding tax, estimated taxes, that becomes your tax liability. So that means how much taxes you have to pay? You have to pay $3,000. Is this point clear? Okay, now let's say second scenario, I'm just putting another scenario. This is 5,000 and this is 6,000. this is going to be negative 1000. Would that be a refund? Sure, Tripti, Nidhi, you raised your hand, I guess. Tripti, you raised your hand. Yes, please ask. Do you have any question? This is going to be your refund, right? No, it will depend. It will depend that whether. So please understand the difference between the um, um, difference between the tax credits and the payment you are making, the withholding tax. So here, tax credits, since most of you have not done the tax credit, so you will not understand what exactly the tax credit. I'll just explain you a few pointers in the tax credit. Tax credit is in a way is the advantage the government is giving to you, so that maybe your kids are going for a college, so that's why they are giving you the advantage in that case. Maybe you're adopting a kid, that's why they're giving you the advantage in that case. Maybe you are going for a work and you have to hire a babysitter for that case, and the government is giving you that advantage. Maybe you are having the kid or any dependent in that case, the government is giving you that advantage in that case. That's the tax credit, because you are doing something, because you are something who needs a special care, who needs a special treatment, so government is giving you that benefit in that case. Maybe you are doing a business, and that business is good for the generally for the people, and that's why the government is giving you the advantage in the form of the tax credits. That's the tax credit. Okay, that's the tax credit. It directly reducing your tax liability. Second is the withholding tax, estimated taxes. All of it is something you have paid out of the pocket, right? Your tax liability does not goes down because of that. Is the point clear, guys, what I'm saying here? The difference between the tax credit and this, only then I'll move. Is it clear? Is it not? I'll explain that. So what I'm saying in this case, let's say your tax liability is coming $5,000, and you are having let's say the taxpayer, I'm talking about the taxpayer has two kids, son and daughter. Both of them goes to a college, and there is a credit that says if they are going for the studies, you can get some advantage in that case. Let's say AOTC and LLC. Let's say this value comes to be $500, this value $800. So you can reduce this directly from there. So this is going to be $1,300. Is that point clear? Up till here, is that clear? This is the advantage the government is giving it to you. Okay, so this is 1,300. So how much the tax you have to pay now? $3,700, right? Now you have to pay 3,700, right? Now, this is tax credit. That means your liability directly goes down. Now it's your liability to pay 3,700. How do you pay? It's up to you. Maybe your employer has deducted enough salary in deduction in that case, just the way we have TDS in India, which is called withholding tax. Or maybe you have paid on your own, let's say estimated taxes, advanced tax. Let's say you paid up till now, out of 3,700, you paid 2,500. So how much you need to pay? You need to pay 1,200. So this is further to be paid. Is this, guys, is this reducing your tax liability? Overall tax liability, is it reducing? Withholding tax or estimated taxes, is it reducing your tax liability? No, your tax liability, this is just how you are paying the taxes. No, if you see here, this is how you're just paying the taxes, right? You're supposed to pay 3,700. You're supposed to pay 3,700. How do you pay? That's a different point. I am paying by withholding tax. I am paying estimated taxes. I am paying the cash in that case. That's how you are paying it, right? Tax liability comes down like that. Correct. Ashutosh, Tripti, is that clear? Okay. So I hope the difference in the tax credits and the withholding taxes are okay. Okay. Tripti, is that okay? Okay. Now, so now the $1,000,000 question comes, what will happen this 1,000? It will depend on, guys, which type of tax credit are we talking about in this case. So in this case, it will depend on, that's exactly I was coming on that. I mean, depends on which type of tax credit are we talking about. Tax credit could be of 3 categories, right? So we can say the tax credit reduces the tax liability. Absolutely. That's why it is also called, Nidhi. In this case, the tax credits are also called the dollar for dollar reduction. So that means it is directly reducing your liability with every single dollar. For example, in this case, if you look directly, the moment you pay this amount, 1,300, it is directly reducing your tax liability. That's why the tax credit is very advantageous, extremely advantageous in that case. Anytime. So guys, whether you will have a refund of that or not will depend on what kind of tax credit we are talking about in this case. We have 3 types of tax credits. We'll have 3 types of credit. First is going to be refundable. Second is going to be non-refundable. And lastly, it is going to be carry forward. The name says it, refundable. That means anything on the top of it is going to be refunded. Okay. So I'm just making the 3 scenarios. Let's say if your tax liability is $5,000, $5,000, and $5,000. I'm just making 3 scenarios for everything in this case. And your tax credit is the refundable tax credit. Let's say $6,000. In that case, you will get the refund of $1,000. So you are absolutely correct. In this case, you are going to get the refund in that case. Let's say the non-refundable tax rate. So that means nothing will happen in this case. This is going to be 0 and the excess is going to lapse. But if it is carry forward, that means if it is 6,000 here, in that case, 1,000 is going to be carry forward to the next year. If the year is 2020 right now, it is going to be carried forward to 2021 itself. Are all the 3 categories clear? No, not clear. Don't worry, we'll do it much more detail when we do the part 1. I'm just giving you very broadly in this case. Sure. So Nidhi, the tax liability is 5,000 and the tax credit is 6,000. So nothing will happen for the extra 1,000. Nothing will happen to the extra 1,000. You will not get the refund of it. You are not going to carry it forward. Nothing will happen in that case. It is something which is going to lapse. So nothing will happen in this case. Okay. Okay. One one authority which I'll keep on using frequently is called the IRS, which is Internal Revenue Service. Okay, who is IRS? What is IRS? Can you just tell me if you're aware of? Anyone who's aware of it? What is this? IRS, like IT department in India. Who's the authority in India, Ashutosh? Correct. It's like a CBDT India, Center Board for Direct Taxes. Similarly, in the US, we have for the federal taxes, we have the IRS in this case. So we'll keep on using the IRS, that you're notifying the IRS about this, you're giving this to the IRS. So we'll frequently keep on using the IRS in this case. Okay, IRS comes under the Department of Treasury. Department of Treasury comes under the Finance Ministry in US, right? So the way we have the way in India we have the Finance Ministry. In the Finance Ministry we have the indirect taxes, direct taxes, everything. Similarly, in the Department of Treasury also there comes the IRS also in this case. DOT, this is also called DOT. It has issued circular. It has issued circular 230. It is also called Treasury Circular 230. It is also called TC 230. We will frequently call it C 230. It governs all the things. It is something which is going to govern the entire, that what are the procedures you have to take care in case your client, if you are a EA and your client, if your client is committing any fraud, what are the rights, what are the duties is for you, what are the things you should be taking care of it. All of it is mentioned in the circular 230 itself. It is not only limited to the EA only, it will apply to all other, every other person who is representing the client, right? It could be CPA, it could be actuary, it could be EA, it could be enrolled agent, it could be enrolled actuary, it could be anyone in that case, right? So it is something which is not going to apply just the EA. Obviously it will apply to EA also, but for everyone who is representing the client in front of IRS in that case. Okay. Okay, so I think that's pretty much it from my side for the part one. Obviously, I cannot do part one right now because we take almost 70 hours just to do the part one. I'm just going to give you a very broad idea about the part one. Similarly, I'll just give you a broad idea about the part two also, and then we are good to go after that. Any questions, guys, up to here? Do you have any questions? Else we'll move about the IRS, about anything in this case. No. Okay. Part two, which is the business entities. Business entities, if I talk about, we can broadly classify the business entity into the two categories. First is the double tax entities. Double tax entity, as the name says, that the tax is levied at the two levels in that case, double tax entity. Second is called the pass-through entities. That means the income is passing through in this case. Double tax entities, that means this is the P&L of the company. This is the sales, this is COGS, this is PBT, and the tax is going to be levied here, and eventually the PAT will go to the shareholder as dividend, and the shareholder will pay the tax on it. So this is going to be your tax number one. This is going to be your tax number two. It's double taxed. It's taxed at the two levels. That's why it's called a double tax entity. For example, C corporation. These entities are called the double tax entities because you're levying the tax at the two levels in that case. Then we have the pass-through entity. What is pass-through entity? Similar to that, the companies will have a sales, the companies will have a COGS, PBT, but no tax is levied at the company's end. Company gives everything to its shareholder. So this will go to its shareholders. Now the shareholders will pay the tax on it. No tax here. That's why it's called the pass-through entity. You're just passing through everything in that case. That's called the pass-through entity. You're just passing on your profits, losses, income, deduction, every other item you're passing to the shareholder, and the shareholder is paying the tax on it. That's called the pass-through entities. Examples for this is going to be S corporation, partnership firm, all of it is going to be part of it. Is it clear, guys? Any confusion? Sure, Nidhi. So what I'm saying is double tax entity. That means you first calculate how much is the profitability for you, right? So this is company says this is my sales, this is my COGS, this is the PBT, and the company is paying the tax on it. This will give us PAT. Now the PAT will go to the shareholder. The PAT will go to the shareholder, and the shareholder will be paid the tax on the dividend because the money is going as a dividend. In that case, one tax is this, Nidhi, which is this, and second tax is paid by the shareholder on the dividend, whatever the shareholder is receiving. So that's why this is the tax number 1. This is going to be tax number 2. That's why it's called the double tax entity. Is that clear? But if I talk about the S corporation, in this case there is no taxes. In this case there is no tax at the company level. In the S corporation, in the pass-through entity, there is no tax here. There is no tax here. Everything is passed on to the shareholder, and the shareholder pays the tax on it. Are we okay? Okay. Okay, I'm just coming back to the pass-through entity. What is the pass-through entity? That means nothing is going to be taxed in the pass-through entity. So if I talk about pass-through entities, the companies say this is my sales, this is my COGS, this is the PBT, and everything will go to shareholders. If guys think carefully and answer, if the company is not paying any taxes, if the company, this is a pass-through company, this company is not paying any tax, is this company needs to file any tax return? Does this company needs to file any tax return? But this company is not paying any taxes. It has no liability of paying any taxes. Has to disclose it. I didn't understand, Diksha, why, for what? You're saying why to file it? Disclose income. Because that's a pass-through entity, Diksha. Because you're not paying any taxes here. Taxes are paid by the shareholders in that case. That's the pass-through entity. Correct. Though there is no liability for this company to pay the taxes, this company still filed the informational return. Informational return. It has no obligation to file it, but still it is required to file the informational return in that case. So for example, if I talk about the S corporation, it files 1120S. Is that point clear, guys? Anyone who has a doubt? Okay, so understand what happens in this case, so that you understand why the IRS is specifically asking you this. This is the S corporation. S corporation says, okay, take everything to the shareholder, take all the income, take all the expenses and everything. Now, this is something the S corporation is reporting in its return, which is 1120S to the IRS. Now the shareholder will have, similarly, whenever you're giving your income, expense and everything, you give a form to the shareholder, which is called the Schedule K1. So for every shareholder, you keep on giving and telling that this is your income, this is your share of income and everything, and you give the Schedule K1. Now this shareholder who is receiving the Schedule K1 will file the return. What is the individual return, guys? What is the individual return? A return number, do you know what is the individual's return number? Okay, it's going to be 1040. So this shareholder is going to file 1040 with the Schedule K1. Now with this, please understand, with this, now the IRS has both the information, 1120S, what the S corporation is saying and what the shareholder is saying. So it's something which is going to be a cross checkpoint for the IRS, so that in case, let's say, S corporation says that the income I have transferred to the shareholder is, let's say, $10,000. But the shareholder is saying, no, I just need to report only $6,000. Now IRS has both the points. IRS can gauge this shareholder is underreporting the income. That's the basic rationale of informational filing, because the IRS will have a checkpoint. In that case, IRS can match this amount and ask the shareholder to file the correct return in that case. Is that point clear, everyone? Done? Should I? It's okay. 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 Anytime, Nidhi. Okay. Now, I'll start with the part 3. I think that much basic information for the part 1 and part 2 is going to be sufficient. As and when I feel that you need more information, I'll just touch base that again. Okay. Now, the topic I'm going to start in the part 3 is going to be practice before IRS. So that means when you are dealing with the IRS, when you're practicing in front of IRS, what are the things you should take care of in that case, right? What are the things you should take care of that? I think it's very theoretical. Directly, let's see it from the book. I think many of you have not received your book, but whoever has got it, I am on page number 1. Whoever does not have it, please read it from my PDF. That's okay. Treasury Department. As I discussed, the IRS comes under the Treasury Department. Treasury Department regulates the practice of the taxpayer representative before the IRS and the rest of the Treasury. For the purpose of the Treasury Department regulation, practice before the IRS covers all the matters related to the following. So when we saying that you are practicing before the IRS, what are the matters you will cover in this case? So in this case, you are going to cover communicating with the IRS of a taxpayer, communicating with the IRS of the taxpayer regarding the taxpayer's right, communicating with the IRS for the taxpayer regarding the taxpayer's rights, privileges, liabilities under the laws and regulation administered by the IRS. Okay, just a minute. I just want to discuss one more thing here. In India, we use frequently, whenever we are looking it, we always call it the assessee. So that means anyone whose tax liability we are determining, we call it assessee. In the US, we don't call it assessee, we call it taxpayer. So I'll keep on using frequently the taxpayer, which is just the same nomenclature for the assessee only. Okay, so which I'll frequently use as a TP. So TP is not the time pass, it is the taxpayer. Okay, so I'm just talking about for the assessee only. That's the one thing. Second, there would be someone who is preparing the return for this. There would be someone who is preparing the return for the taxpayer. We call that person very frequently is the TRP, which is tax return preparer. So these are the things, these are the 2-3 things we will use very frequently. You should not get confused. Taxpayer, that means whoever liability we are talking about is going to be the taxpayer. TRP, it could be anyone who is preparing the return. It could be any EA, it could be any CPA, it could be any attorney, anyone in that case, right? IRS we have already discussed in that case. Now let's see. So when we say practice, what do we mean by that? So basically you are going to communicate with the IRS for a taxpayer. So you are communicating for the taxpayer, for your client. Basically, if you are a EA, you are communicating with the IRS for your client in that case, regarding the taxpayer's rights. What is the taxpayer's rights? So you're talking about the taxpayer, your client's rights, privileges, liabilities under the laws, regulation administered by the IRS, representing the taxpayer. So that means you are representing your client. So that means if you are as a EA, you're representing your client at the conferences, at the hearings, or the meetings with the IRS, and preparing and file the necessary documents with the IRS for the purpose of the for a taxpayer itself. Okay. For the preparing and filing the necessary documents with the IRS for the taxpayer itself. Okay. Let's just move to page number 2. Guys, your book is given in a very unstructured way. When I talk about people who have done the part 1 and part 2, they're very well aware of it. So first I'll move to the relevant portion. I'll just show you where the relevant portion are, because it's just scattered all over. So I'll just show you the relevant portion, and once you're done with this one time, you can just skip around the way you want to in this case. So I'll just focus on the relevant portion first, because it's just all over the places, right? First you see the practice things, and suddenly in between the P10 is coming, so it's just little over the place, all over the places. So I'll just follow the very logical sequence of it, and then later on, once you're done with it, you can flip around anyhow the way you want. Now I am on second page. Rules of practice before the IRS. What are the rules for you in this case? An attorney, CPA, EA authorized to practice before the IRS has the duty to perform the certain act and is restricted from performing the other act. So obviously you have certain duties to perform, you have certain duties not to perform in that case. In addition, a tax practitioner cannot engage in the disreputable act, right? Any tax practitioner who does not comply with the Circular 230 rules of practice or engage in a disreputable conduct is subject to the disciplinary actions in that case. What is the disreputable act? We'll discuss it. So in case, generally that's the rule. Generally, you're supposed to, the person should not get into any disreputable act. If you are getting into this, then in that case, the IRS is going to take the disciplinary action against you. Practice before the IRS. Practice before the IRS includes all the matters connected with the presentation to the IRS or any of the officer or the employees relating to the taxpayer's rights, privileges, or the liabilities under the laws or regulations administered by the IRS. Such presentation include, but are not limited to, preparing the documents, filing the documents, corresponding and communicating with the IRS, rendering the written advice with respect to the entities, transactions, plan or arrangement, or other plan or arrangement have a potential of the tax avoidance or the evasion, and representing a client at the conference meetings and the hearings. In that, are we supposed to learn this? No, we are not necessarily. We are not supposed to learn this. It's just the broad idea about this, that as a EA, what are the things you are going to do it? Obviously you're going to represent your client in front of IRS. In case the IRS is asking for any information, you're going to discuss that and appear in front of the IRS and furnish that information. All of it is the part of the how do you practice in front of IRS in that case? How do you practice before the IRS in this case? Okay. Let me just go through it one more time. Practice before the IRS includes all the matters connected with the presentation to the IRS, any officers related to the taxpayer's rights, privileges under the law in this case. Such presentation includes preparing the documents, filing the documents corresponding and communicating with the IRS, rendering the written advice with respect to the entity in this case, representing a client in the conference in this case. Does that include that can the EA if the EA if the EA is presenting himself as a witness for any case, right? So let's say if the EA is appearing in front of IRA as a witness, so EA is just going there and attending any kind of hearing just as a witness. Maybe you are giving any witness and you are being the witness in that. Do you think that will tend to amount to practice? You're just going there as a witness. Do you think that will tend to amount to practice? Correct. That is you just going there as a witness only. So that should not tend to amount to practice itself. Correct. Okay. Why I'm specifically telling you about this, because in your question they will give you many categories like that, whether the person is going to be, this will tend to amount to practice or not, this will tend to amount to this. So generally they will sometimes test you this also, that whether are you appearing as a witness only, will that tend to amount to practice or not. So generally yes, it is not going to be the practice in this case. Okay, anyone can be anyone who is not suspended or who is not disbarred. Anyone who is not suspended or anyone who is not disbarred can be the practice, are eligible to be practiced before the IRS in this case, right? So it could be any CPA, it could be any EA, it could be any enrolled actuaries. I'm just calling it's as a EA2. It could be any attorney also, all of it. So provided you are not suspended, you're not disbarred by your any of the deeds in the past, you have not been suspended. If you have been suspended, that means you are not eligible. You're not eligible to practice before the IRS in this case. Okay, let's see this. Generally the enrolled actuaries or the retirement plans are basically for the retirement plans in that case. Let's see this. Okay, can you just try, guys, read up till here on your own, up till 5th point. Very basic. I'm on page number 3. If you want me to scroll, please let me know. Are you done, guys? Have you read this all? Okay. Page number 2 and 3, Nidhi. Okay, just have a read that. So basically, in this case, we are going to cover everyone. We are going to cover anyone who is not disbarred, who is not going to be disbarred, who is not suspended in this case. Okay, in between, you would have find a lot of referencing. Let's say this. If I'm an attorney, this is called this sign. What is this sign called, guys? This is basically the referencing for the section. Yes, that's the referencing for the section in this case. So at the end of your book, if you come to your book, at the end of your book, In your book, they have given the relevant extract of the Treasury circular also. So if you see here, every section number is mentioned here also. So all of it, information to furnish, everything is mentioned in this case. Knowledge of this is mentioned in this case. So whatever the referencing is given in the beginning of the book is going to be mentioning in this case only. Back. So that's what the referencing we are getting in this case. Okay, let me just quickly cover that. An attorney who is not currently under suspension or disbarment from the practice before the IRS may practice before the IRS by filing the IRS a written declaration that the attorney is currently qualified as the attorney or and is authorized to represent the party or the parties. Attorneys who are not currently under the suspension or disbarment from the practice are not required to file the written declaration with the IRS before rendering the written advice in this case. But their rendering of service is going to be practice before the IRS. We discussed the rendering of the written opinion is going to be the practice in this case. CPA, a CPA who is not currently under the suspension or disbarment, we have done this. You need to give the written declaration that the CPA is currently qualified as a CPA in this case, not currently under the suspension or the disbarment in this case. EA, again the same, individual enrolled as an agent who is not currently under the suspension or the disbarment may practice before the IRS. Enrolled actuary, any individual who is enrolled as an actuary by the JEEP, which is called a joint board of the enrolled actuaries, who is not currently under the suspension or disbarment, same thing in this case, who should not be disbarred or suspended. Practice as an enrolled agent, actuary is limited to the representation with respect to the issues involving the specific statutory provision, mostly related to the pension. So generally their opinion is more related with the pensions only. Lastly is the enrolled retirement plan agents in this case. Any individual who is enrolled as a retirement plan agent who is not currently under suspension or disbarment from the practice may also practice before the IRS. Practice as the enrolled agent is also limited to the pensions only in this case. Now, it's not necessary that you have to hire someone for doing that, right? That you as a taxpayer you have to hire EA, CPA, attorney in that case. No, it's absolutely okay that you can represent yourself in front of the IRS also. So that's also allowed, that you represent yourself also in front of IRS. See this, representing oneself. Individuals may appear on their own behalf before the IRS provided they present the satisfactory identification. You have to furnish your social security number, you have to give your income tax identification number, everything you have to mention in this case, but you're free to represent yourself also in this case. Any individual who is not a practitioner, such as EA, may represent a taxpayer before the IRS in the following circumstances. An individual may represent a member of his immediate family. So it could be for the father, the son is represented. So for the father, the son may also represent in this case. A regular full-time employee of the employer, so your employee can also represent you in this case. A general partner, a partner could represent the partnership also in this case. A bona fide officer or the regular full-time employee of a corporation in this case. So any of the officer can represent in front of IRS also in this case. The corporation, association, or the organized group may represent the corporation, association, or the organized group in this case. A regular full-time employee of a trust, or the receivership, guardianship, or the state may represent the trust, the guardian receivership, or the guardianships, or the state. So in case we are talking about the trustee could happen. If we are talking about the state, in that case the executor of the state could happen in this case. An officer or the regular employee of the government unit or the agent or agency or the authority may represent the governmental unit, agency, or the authority in the course of the official duties. May also represent. An individual may represent an individual or entity in outside of the US before the personnel of the an individual may represent any individual or the entity who is outside the US before personnel of the IRS, when such representation takes place outside the US in this case. So that means if we are talking about let's say let's say we're talking about A, in that case you can represent outside also. In this case, an individual may represent any individual who is outside the US. In this case, if someone is outside the US, you can appoint anyone, so that you can appoint that person, and that person will represent you before the personnel of the IRS. Such representation takes place outside the US only in this case. Okay. So what we have done up till here, that who could be practiced before the IRS. We have done that anyone, it could be CPA, it could be EA, it could be enrolled actuaries, it could be attorney, it could be the retirement plan agents, it could be anyone. You can also represent yourself. So immediate family member, you can also represent yourself. If you're outside, you can suggest anyone, that person can also attend. Anyone can do in that case. That should not be a problem in this case. Now, this is something, please understand, this is something we are saying, that who is going to represent in front of, who is going to represent before the IRS. Now, we will discuss this now. The tax return preparer, we are going to talk about the TRP. Who is going to be the TRP in this case? TRP, that means who is going to prepare the return, who is going to be categorized as the TRP, who is going to be classified as a tax return preparer. Tax return preparer is not going to be someone who is going to sign only. It could be anyone. It's not necessary. It is good that if one person is doing everything and that person is signing, we can get this, but it is not the mandatory condition that the person who is signing can only be classified the TRP only. No, it's not necessary that it could be the case that someone who is not signing the return can still be TRP. That sounds confusing. How come it is the TRP? Sometimes what happens, the return which you're preparing, sometimes what happens when the return you're preparing, it needs a lot of calculation, it needs a lot of assistance in that case, and you are taking assistance of someone. If you are taking the assistance of someone, guys, in that case, the person who is assisting, that will also tend to amount to TRP. That will also tend to amount to TRP. Okay, let me just explain in a very simple terms. So what are we saying? We are talking about this taxpayer. We are talking about the assessee. We are preparing the return for this. We are preparing the return for this tax return to this TP. Who is going to prepare the return? TRP. Now, there could be one person, there could be multiple people who could be TRP in that case, right? So it's not necessary who is going to sign will be the only person TRP. No, anyone who is signing, anyone who is assisting, anyone who is working on it can be classified as the TRP. Is that point clear, guys? Any clear? So anyone who is signing, anyone who's actually making it is going to be the part of it in this case. Okay. When I'm talking about assisting, that means you're assisting. We are not talking about, when we're talking about the assisting, we are talking about something with the work you're doing. It's pretty much okay and substantial in that case. That means we are going to talk about someone who is doing a very menial work. Someone who is doing a very menial work, that person cannot be classified as TRP. For example, there is a photocopier in your office, right? So that person is just photocopying all the returns, the previous return of the client. You can't say that photocopier is going to be the TRP. Or someone who is just copying and pasting the data from the personal records of the client to the return. In that case, you can't say that person is also the TRP in that case. No, so assisting is different, and doing a menial and the petty work is different in that case. Please understand the difference. Assisting is basically you're trying to help in something, you're trying to help with the calculation. In that case, that's assisting. Menial is something when you're doing a very, very menial work, you're punching the data, you're just typing the data, you're just copying the data. That will not be tend to amount to TRP in that case. Let's from the book. There are no examination requirements that must be met in order to prepare the income tax. There is no examination requirement that must be met in order to prepare the income tax return in this case. Participation is not important, but kind of work. Participation is not important, but the kind of work for the TRP. Yes, Deeksha. There are no examination requirements that must be met in order to prepare the income tax return. No, it's not necessary that you have to prepare, you have to be qualified, that you have to be CPA only, you have to be EA only, then you only can file the return. No, there is no requirement in that case. Anyone who is not qualified also can also be the TRP. That should not be a problem, right? So this is not the requirement that you have to be EA, you have to be CPA, you have to be attorney in that case for preparing the return. That's just not the condition. So that's why there are no examination requirements that must be met in order to prepare the income tax return. All the paid, important point here, all the paid tax return preparer must obtain the PTIN in that case, right? So anyone who is filing it and doing it for the paid purpose in that case, that person needs to get the PTIN in this case. The requirement to obtain the PTIN applies to the TRP who prepares or helps the tax return prepare. For the purpose of the requirement to obtain the PTIN, the tax return preparer is any individual who is compensated for this. So when we say paid, it is something which is going to be compensated for preparing or assisting in the preparation of all subsequently tax return or the claim for the refund. It's first page number, Nidhi. No, Rajat. If you are filing returns, that's what they're saying it. The requirement to obtain the PTIN applies to the tax return preparer who prepares and helps to prepare. So if you are filing the return, then you need it. When you're filing the return, then you need it in that case. And individuals may be the tax return preparer, even though the returns she prepares was signed by someone else. So it's not necessary that you are doing on your signing, anyone else can do the signing in that case. A tax return preparer need not to be the credential professional. So it's not necessary that you have to be attorney, EA or CPA. It could be anyone. The following people must need the PTIN in that case. So attorney needs in that case. The CPA needs the PIN, the EA needs, and the paid preparer needs in that case. You can sign the return as TRP. No, you need PTIN. Can TRP sign a return for approval? When we what exactly you mean by return for approval? Okay, these are the people who are not going to be. These are the people who are not going to be. I am on. I'm sorry, guys. It's just your pointers in your book are all over the places. First, it was second page, and now it's on the page number 5. No, you need PTIN for that. The individuals who are not going to be the tax return preparer. So in that case, who is not going to be the TRP in that case? So these are the guys who are not going to be the TRP. An individual is not considered to be TRP merely because the taxpayer does any of the following. An individual is not considered a TRP merely because the individual does any of the following. You're furnishing the typings, you're just typing everything, you're reproducing or other mathematical assistance in that case, prepares a return or the claim for the refund of the employer or the employee of the employer by whom the individual is regularly or continuously employed. So if you're working as an employee in that case, you're not a TRP in this case, prepares a return or claim for the refund as a fiduciary in that case for that person. So basically we are talking about the trust and trustee, we are talking about executor and the state in that case. prepares a claim for the refund for the taxpayer in response of the assessment issued. So you're looking to claim for a refund in that case. In that case, it is something which is not going to be considered in this all of these cases. It is not going to be considered as the TRP. In all of these cases, it is not considered to be the TRP. Otherwise, generally, everyone who is the paid tax return preparer is going to be the TRP in this case, right? The only point which I left in between is called the OPR, which is going to be the Office of the Professional Responsibility, which is the OPR in this case. What is OPR? OPR is basically the disciplinary authority. So that in case you are doing anything which you're not supposed to do, you're doing any of the conduct which you're doing it, which is not allowed to be done as a EA to you, in that case, they can take the stern action against you. So see this. To assist in the regulation of the tax practices, to assist in the regulation of the tax practitioner, the IRS has established the OPR, Office of the Professional Responsibilities, to oversee the tax practitioner and in appropriate cases, application of the disciplinary action to improve the professional conduct of the tax professionals. The OPR is responsible for licensing the EAs and investigating the allegation of the misconduct and the negligence brought against the EAs, attorneys, CPAs, RTPs is going to be registered TRPs and the other professional practices in that case. Obviously, it will not happen that someone has filed a complaint against you. If you are an EA and they have filed a complaint against you, you are going to lose your license. No, your reasonable opportunity will be given to you. So you will present your case that why it is the case. So you're going to put forward your case in that case. And if the OPR is satisfied that yes, your case is also genuine in that case, then they are going to just suspend the complaints against you in that case. One last point in this case, the federal tax practitioner, including the EA, who prepare the tax return and represent the taxpayers before the IRS, are subject to the variety of the rules that regulates their professional conduct. Practice before the IRS is governed by the Treasury Circular 230, which is called the TC 230, applies to all the tax practitioner, including the attorneys, CPAs, enrolled agents, and the registered tax return preparer. So it's something which is not only going to be applied in that case only to the EA, but it is something which is going to be applied in otherwise also in that. Okay, I think I can move. Okay, before I move, I just want to discuss a very basic point I'm sure you would be aware, which is called the privilege information. What is privileged information? Privileged information. Okay, personal information. Any other? So one is, so can you give me the example of what are the instances? One, you're saying maybe the client and a tax practitioner. Anything else which comes to your mind about the privileged information? Any of the professional where you find the privileged information very much? Anywhere where you find a privileged information a lot? For example, let's say attorney and the client. That's called their communication. It's called the privileged communication in that case. So that means if the client tells the attorney that yes, actually I have committed the murder, I have done the murder, the attorney is not going to the court and say yes, the client has told me that he has murdered, please go and hang him. No, that's called the privileged conversation. That's the basic meaning of the privileged conversation, privileged communication, privileged information, that you're not going to share that information with anyone else. In that case, that's the privileged conversation or the privileged information in that case. For example, doctor and the patient. That's also the privilege information. That's also the privilege communication. That's also the privileged relationship in that case. So that means if the doctor is aware of any of the disease of the patient, the doctor is not going to tell to outside people. No, that's the doctor patient privilege conversation. Is that clear, guys? Everyone? So for example, it should not happen that any celebrity which goes to any doctor, uh, and the doctor gives the information to the media that I got to know that this celebrity is having suffering from this problem, and try to cash in that case. No, that should not happen, because that's the privileged information. You should not share it with anyone in that case. Is that clear, guys? So similarly, there is a privileged conversation, there is a privileged communication between the tax practitioner and the client. So in this case, this privileged information you should not give. You should not give this privileged information to the IRS. So whatever the client is sharing with you, you should not give this information to the IRS. That's the basic meaning of the privileged information. Let's see it from the book. I am on page number 6. Requirements for the EA. An EA must on a proper and the lawful request by the duly authorized officer or the employee of the IRS, promptly submits the records or the information in any matter before the IRS. So you, as and when they're asking the information, you will promptly submit the information, unless the EA believes in the good faith and on the reasonable ground that the records or the information are the privileged. If it is the privilege in this case, then it is not. Then you're not going to find that. If the information is illegal, any responsibility in the terms of the privileged information. Yes. So Rajat, if the information is illegal and if it is something which leads to the criminal things, then in that case you can share it with the authority, respective authority. But as far as it is not criminal, you're not supposed to share that. What you can do, Rajat, in that case, you can sever the relationship with the client in that case. So you can withdraw. In that case, that option is available with you. Where the requested information or the records, or the information are not in the possession, or where the requested records or the information are not in the possession or the subject to the control of the EA or the EA's client. So when the IRS is asking for some information and you do not have this information, or the client does not have it, the EA must promptly notify the requesting IRS officer or the employee, and EA must provide any information that the EA has regarding the identity of a person who EA believes will have the possession or the control of the requested information in that case. So in that case, the IRS is asking for any information, you will inform the IRS about this if you have the information. If you don't have it, you will try to arrange it with the client and then provide it. If you don't have it, you will inform the IRS about this. The EA must make the reasonable inquiry of his client regarding the identity of a person who may have the possession or the control of the requested information. So you will ask your client in that case that the information you need, the IRS is needing in that case, from where and how you can arrange that information in this case. But EA is not required. EA is not required to make the inquiries of any other person, independently verify the information provided by the client in that case. So you will not become the Sherlock Holmes on your own and try to investigate the third person. No, you're not going to do that. In case you will ask the clients that who has this information, what information, when you need the information, you will ask just the client that who has this information. You will not go and check the information on your own in that case. That's something you're not going to do in that case. where a proper and the lawful request is made by a duly authorized officer or the employee of the IRS. Now, important point, duly authorized, lawful, proper and lawful request. It has to be a proper and the lawful request. It should not happen that the EA and the IRS employees have gone for a drinks in the night and then the EA is revealing the information. No, that's unlawful. That's beyond the client privilege also in that case. So that should not happen. It has to be a proper written, it has to be a proper lawful request in that case. So when a proper lawful request is made by the duly authorized officer or the employee of the IRS, concerning an inquiry into the alleged violation of the regulation relating to the information to be furnished to the IRS. And EA must provide any information to the EA has concerning the alleged violation and testify regarding this information in any proceeding instituted under this part, unless the EA believes in the good faith or the reasonable ground that information is privileged. So if this is a privileged information, you're not going to share this. Otherwise, yes, definitely you can share in that case. Interfere with a proper and the lawful request. In this case, an EA may not interfere. So you're not going to interfere or attempt to interfere with any of the proper or the lawful effort by the IRS, its officer or the employees to obtain any record on the information, unless the EA believes in the good faith on the reasonable ground that the information is going to be privileged in that case. So you're not going to interfere in any of the proceedings that would be unlawful in that case. It's just like you will inform the client, you will inform the IRS about the nature of that. You are going to nature the privilege in that case. Now, omission or the error on the return in this case. Okay, first let's finish the privilege. The confidentiality protection for the certain communication between the taxpayer and the attorney applies to the similar communication between the taxpayer and the federally authorized tax practitioner. So the way we have the relationship between the taxpayer and the attorney, we discussed the client and the attorney, similar privilege will apply here also. As indicated, federally authorized practitioner include the attorneys, CPAs, and the EAs. The protection of this privilege applies only to the tax advice given by the taxpayer by an individual who is federally authorized tax practitioner in this case. The tax advice is advice. The tax advice is advice in regard to the matter that is within the scope of the taxpayer authority to practice in this case. So obviously, whatever within the scope of the taxpayer authority, that will be covered in that only. The confidentiality protection applies to the communication that would be considered privileged if it were given between the taxpayer and the attorney and relate to the non-criminal tax matter before the IRS or the tax proceeding brought in the federal court or against the United States in that case. So it has to be for the non-criminal purposes, not for the criminal in that case. Relying on the information furnished by the client. Okay, this is again not for. Okay, relying on the information furnished by the client. Okay, let's see this. Okay, let's say this is the client and client is giving you the information. You are the EA and the client is giving the information about his return, right? Would you trust this information or not? Would you trust this information? Or would you doubt the client about this? Prima facie, you will say this is okay, right? So prima facie, you are going to be okay with that. But if the information is giving you the contradictory things, right? For example, the client has given you two tax returns, right? So client has hired you in the year 2021 as a EA for the purpose of filing your return, and the client has given you the return for 2020. So client has given you the return for the federal income tax return for 2020, and client has also given you the state income tax return. So both it has given to you. Now, the federal income tax return says that the taxpayer has filed the married filing jointly. But the state income tax return says that he is single. Now, this is contradictory. Now, since you're finding such information where there is a contradiction, you will further inquire the client in that case. Prima facie, you will see that whatever the client is saying is correct, but whenever you're finding anything which is contradictory in that case, you will further investigate in that case. Is that point clear, guys? Okay. An EA advising a client to take a position on the tax return, document, affidavit, or other preparer submit or the other papers submitted to the IRS, or preparing or signing a tax return as a preparer generally may rely in the good faith without the verification upon the information furnished by the client. An EA may not, however, ignore the implication of the information furnished to him, actually known to him by the EA, and must make the reasonable inquiry. So obviously, once you're aware, we are aware that there's some problem, we are aware that this guy is married, then why the person is saying single in that case? When you're aware of it, when you get to know about this, or when you're finding the contradictory information, in that case, you take the necessary action in this case. If the information as furnished appears to be incorrect, inconsistent with the important fact or other factual information, or if it is something which is going to be incorrect in this case. Okay, let's see this also. Omission or error on the return document or the affidavit in this case. Now, when you're filing it and when you're filing it return, maybe the client has done some mistake in the last year, or maybe while filing it in the current year also, you find there are some omission, there are some error in that case, which is done by the client in this case. So for example, the client has hired you for the 2021 return. But while reviewing the 2020 return, you found there are many errors in the return. There are many errors in the return. What will you do? You will say, I don't care. I have not done this. Why should I do? Is that? Or will you inform the client? Will you inform the client or will you inform the IRS about this? Correct. You are going to inform the client about this, and you will suggest this is the problem. These are the problems. Please correct these mistakes. If you have not corrected, not only you are going to inform the client, guys, you will inform this that what is going to be the possible implications of that. There could be a penalty, there could be interest levied on that case. So you're going to tell them the implications also. So you will inform the client about the errors, plus you are going to inform the implications also. Both of it. It's just not that you're going to tell the errors, but you're going to tell it. What about the guys, the client says, no, I'm not going to change it. The client says, I'm not going to change it, mind your own business. What will you do? You will complain it to IRS. Client says no and say no. Then will you complain against the IRS? Correct. You will consider, no, consequences you have already explained, Nicola. So that's what I'm saying. You have explained the consequences also to the client, but the client says no, get lost. So what will you do in that case? Yes, in that case, it's your wish if you want to continue, or you can withdraw your services in that case. You will withdraw from the engagement in that case. Absolutely your wish in that case. Circular 230, which is C230, does not ask you to leave this. The circular 230 does not say in this case that you withdraw from the engagement. Circular 230 says it's your wish after that whether you want to continue or not in that case. Generally, ideally, you should withdraw from the engagement. Let's see now. An EA who has been retained, by the client with respect to a matter administered by the IRS, knows that the client has not complied with the revenue laws of the United States or has made an error omission of any return document, affidavit, or the other paper which the client submitted or executed under the revenue laws of the US must advise the client promptly of the important point here, guys, must advise. It's your responsibility to advise that. It's not should. We are not saying should. We are saying must advise it. Must advise the client promptly of the fact that such non-compliance, error, or omission in this case, the EA must advise the client of the consequences as provided under the code and the regulation of such non-compliance, error, or the omission in that case. Okay, I think we can stop here. We can try some MCQs up till here. Okay, just give me a minute. Lawson and EA discovers the material non-compliance with specific IRC requirements in the prior year return of the new client. Which of the following action should the Lawson take? Contact the IRS? No. Contact the prior tax return preparer? No. Wait for the statute of limitation to expire? No. B is the answer, correct. Discuss the requirements of the IRC with the client. Recommend that the IRS should amend the return. Correct. Correct. C is the answer. If you go back and see your practice before the IRS, the first three conditions you will see is the same. That the rights, privilege, and anything you're informing about to the IRS, it is the practice. It is the practice before IRS. We are looking something which is not a practice. C is not a practice. Preparing a tax return or the furnishing information at the requesting of the IRS is not really the practice. Correct. C is the answer. According to the standard of the professional, everyone's saying A. According to the standard of professional, which of the following is correct regarding the actions to be taken by the EA who discovered an error in the client's previously filed in that case? Advise the client of the error and recommend the measures. That's correct. Withdraw from the relationship. No. Regardless of this, no, that's incorrect. So yes, A is the answer. Only one is correct. Which of the following statement is correct concerning the Charlie? So I've got maximum A. Which of the following is correct regarding the Charlie and EA and submission of the records and the information upon the lawful request in that case? He's not required to submit the documents. No, that's not correct. He's not required to submit the documents. No. He's required to submit the document in all the circumstances. No. He's required to submit such documents unless he believes in the good faith and the reasonable ground that the records are the privileged. Absolutely correct. Identify the individuals who is not eligible to practice before the IRS. None of the individuals are under the suspension in that case. EA is going to be eligible, so not the answer. CPA is eligible, so not the answer. Attorney is eligible, so not the answer. CFP is not eligible, so that's why it is the answer. Okay. When reviewing a new client's prior tax year return, a tax return preparer becomes aware that the client did not properly file all the required federal income tax return under Treasury Circular 230. What should the tax return preparer do in this situation? Correct. You need to advise the client of the consequences of the non-compliance. Correct. Which of the following is considered practice before the IRS? Appearing as a witness is not a practice, hence not the answer. Furnishing information at the request of the IRS is not practice, not the answer. Preparing a tax return is not the practice. Correct. None of the choices are practice before the IRS. Good. So Nidhi, you're asking about point 3. You're saying practice before the IRS. Is that what you're asking? You're saying practice before IRS is similar to preparing return? Okay, let's just go back to the earlier question, then we'll do it. Don't worry. So see this. While preparing a tax return preparer for the new client and reviewing the client's prior year return, a tax return preparer noticed an error made by the client's former tax return preparer. According to the TC 230, which of the following is specifically required to do it? Inform the client of the error. This is absolutely correct. And insist that this must be amended. No, you can't insist that. You can advise that, you can inform that consequences, but you cannot insist. No, because of if this is insist, this is not the answer. Is that okay, Nidhi? Now, inform the client of the error, yes. Advise of the consequences, yes. After that, whether the client does not does, that's absolutely their choice. But you can't push the people to do it. Okay. In this question, you're saying it. Yes. So it is just like a third point only. It is just a so what's your question in this? You're saying this is like this is the practice before the IRS. In a way, you're saying okay, so you are saying that corresponding and communicating with the IRS, it will fall here. You're saying it because the corresponding and the communicated could be fall into the furnishing information. Is that correct, Nidhi? Correct? Is it? Furnishing information, you're saying it, right?
Hello, sir.
Yeah, go ahead.
So I was referring to the bullet point number 3 in page 1, preparing and filing necessary documents with the IRS. So if you scroll up page to page 1, is this page 1? No. Yeah, this page 1. Can you please scroll up? Yeah, the third point, the bullet point. Yes, preparing and filing necessary documents with the IRS. So is not the option that is given in the question option D similar to this?
No. Anything else? Is that okay? I'll plug in my mic.
Sorry?
Is there anything else? I'll just plug in my mic so that you hear me well.
No, yeah, only this point. I want a clarification because I think option D is similar to this third bullet point.
Sure.
And if I was there giving a examination, I would have opted for option D.
Sure.
So that is why I wanted to discuss this
Sure.
with you.
Okay, sure.
Yeah.
With the furnishing the information, the C point, right? Is that what you're saying? Furnishing information.
Furnishing information, and the D point, preparing a tax return is also preparing the necessary filing documents. It is similar, I suppose.
Right, but here they are just looking into the isolation, right? They are just looking into the isolation. Let me just do every point one by one, right? Which of
Yeah.
the following is considered to be the practice before this? So witness is definitely not the practice, so not the answer in this case. Okay, preparing the tax return is not Rajat, is not the practice. So that means it is also out. Now this C point, furnishing information at the request of the IRS is correct, which you are saying it's pretty much like the way we have done here. I think you're referring this point, right? Third
Yes.
point.
Yes, sir. Yes, sir.
I can't hear you. Are you saying something?
Yeah, this is the point which I was referring, sir.
No. When they're saying preparing and filing the necessary documents with the IRS for a taxpayer, they basically means that you're representing your client in this case. Here they're saying it basically means there is any inquiry which has come from the IRS and you are along with the taxpayer furnishing that information. One information could be that they're asking for the additional information. For example, you filed the return and they're asking for more information. That's the further information you're giving, which is given in the question. If you look this, if you look here, if you look here, furnishing the information at the request of the IRS, right? Here it looks like more like a IRS is asking for the more information. IRS is asking for some clarification. IRS is asking some additional information. It looks like on the face of it. What given in the book is like that IRS is doing some inquiry on you and you are preparing some documents for the client so that you can give more better documentation to the client for the purpose of your client. So in a way you are more representing your client in that the question which is given in the book. Here it is something you are providing more additional information. So here you're working more like a postman, there you're working more like a attorney, more like a representative of your client. Is that clear? So here is just like it seems on the face of it that they are asking you some information, some clarification, and you're providing that clarification in that case. Is that clear? Which of the following individuals, sorry, everyone got D, which of the following individuals qualify as a practitioner under C230? Attorney, yes. Enrolled actuary, yes. CPA, yes. So yes, all of the following. Identify the appropriate action that a practitioner should take when he or she becomes aware of the error or omission. In this case, promptly advise the client of such non-compliance, error, or the omission. Absolutely correct. Practice before the IRS comprehends all the matters connected with the presentation to the IRS or any of the officer or the employees related to the taxpayers' rights, privileges, or the liabilities under the laws or the regulation administered by the IRS. Which of the following is not considered to be practice? Communicating with the IRS, it is the practice, not the answer. Preparing and filing the documents is a practice, not the answer. Representing a client at the conference is a practice, not the answer. Appearing as a witness, yes, that's not going to be practice. What can be said about the Paul who is an barber and prepares the federal income tax for $20 a piece during the tax filing season? But Paul is not a EA, guys. He is not even a EA. He is not even a CPA. He is not even an attorney. He is a barber. Can he still be? Correct. It does not matter. We have done this. This is, they have specifically given you just to confuse you in this case. As far as you're paying for it, as far as is it a paid, as far as it is a paid tax return preparer, it's good to go. Absolutely. D is the answer. Paul is considered to be a TRP. Good. Donald, an EA, has the knowledge that the client has not complied with the revenue laws. What is the response? Is B not the answer? Is minding your own business is not the answer? Correct. It's, you have to, at least initially for the first time, you have to advise this. Otherwise, now the client takes it, does not take it, that's the prerogative of the client, but it is your responsibility to advise in that case. Correct. Yes, that's a responsibility of the EA. In fact, every tax practitioner. Practice before the IRS comprehends all the matters connected with the presentation to the IRS or any of the officer or the employees relating to the taxpayers' rights, privileges, or the liabilities under the laws or regulation administered by the IRS. Which of the following is not considered to be a practice? Before the IRS, preparing and filing the documents is a practice, so not the answer. Representing the client at the conference hearings, the meeting, it is the practice, so not the answer. Communicating with the IRS is a practice, not the answer. Furnishing information at the request of the IRS is not the practice, hence C is the answer. Jane is a CPA who specializes in preparing the federal tax return. Which of the following returns would qualify a Jane as a tax return preparer? Correct, all of it. Margaret Smith is a CPA who is representing the John and Mary Jones before the wage and the investment decision of the IRS. The service is questioning. When I say service, here means the IRS. The IRS, Internal Revenue Service, is questioning the John and Mary on the contribution that were listed on the Schedule A on the form in this case. Schedule A is basically used it for your itemized deductions. Okay. So service is questioning, the IRS is questioning the John and Mary on the contribution that were listed on the Schedule A of their form 1040. So in the itemized return, itemized deductions, right? So you remember the format, we're talking about the itemized deduction. While reviewing the documentation provided by the John and Mary, Margaret discovers the contribution that were made to a non-qualified organizations, guys. So one of the itemized deductions, guys, is everyone who has done the part one with me, can you tell me which itemized deduction are we talking about here? Can you tell which itemized deduction are we talking about here? It's the Schedule A, so that means we are talking about itemized deduction. Which itemized deductions are we talking about here? out of the lit CM? Precisely. We are talking about charitable in this case. So here, the Margaret discovers that the contribution were made to the non-qualified. So guys, when you're making any contribution, right, to for a charity does not mean that you give money to anyone and the claim the charitable deductions. No, it has to be given to the qualified charitable organizations, right? So ideally you should give to the qualified organizations. You cannot give to the poor family, you cannot give it to your friend, you cannot give to any poor or the needy family. No, it has to be given to the qualified organizations. In this case, understand, when you're reviewing the documentation provided by the couple, the Margaret discovers, the CPA discovers that the contribution that were made to the non-qualified. So it was not made to the qualified. It is not it's made to the non-qualified. And since you're made to the non-qualified, you cannot take the itemized deductions. What is the appropriate action in this case? Margaret must advise the John and Mary promptly of the omission and the consequence provided by the Internal Revenue Code and the regulation of such omission. Correct. Is the answer. Which of the following is not an example of the practicing? Representing a client at the conference and the hearing, it is practice. So not the answer. We're looking not practicing in this case. Preparing and filing the documents. Again, this is slightly confusing, but I think we have to pick the we have to provide something which is out of the everyone. What is the worst in that case? I'll come back to this. Preparing, corresponding and communicating with the IRS, it is the practice. So not the answer. Now the choices remains B and D. Rendering written advice on the recent IRS decisions, it is something which is not the practice for sure. That's why D is the answer, not the B. So B is basically they are asking for the information, you are giving the information in that case, because you're representing, you're the client in that case. Hence, D is the answer. Is that okay, guys? Which of the following items are the criteria? Which of the following are the criteria for a person to enroll as the enrolled agent? The applicant demonstrates a special competence in the tax matters by the written IRS examination. That's correct. Applicant refrains from engaging any conduct that would justify as the suspension disbursement. That's correct. Applicant possesses a current or otherwise valid PTIN in this case. That's correct. Correct. All the three. Mike is an EA. Widget Inc. is an accrual basis taxpayer. In 2021, while preparing the widget's tax return, Mike discovered that the widget fails to include the income in the 2020-2019 return, which is received in 2020 but should have been included in the income in 2019 under the accrual method of accounting. What must the Mike do? Advise the widget of the error and the consequences of the error. Absolutely. Which of the following individuals will not be treated as a TRP under this? EA is a TRP, so not the answer. Individual who prepare the income tax for the compensation is going to be TRP, so not the answer. Lawyer, guys, lawyer and attorney are pretty much the same thing. It's the in US we use it interchangeably, which is again the TRP, so not the answer. All of the individuals are the TRPs. That's correct. Is that okay, Pooja? Anytime. Identify the items below that is not considered the practice, something which is not considered the practice. Okay, representing a client at the audit. So audit is pretty much like a scrutiny in India, guys. When you file the return and the the income tax department find there is a problem. In that case, they will ask for the information. If the information is not satisfied, they will do the scrutiny in that case. Similarly, this is the audit also, which is done by the IRS in that case. So when the IRS is doing the audit, and you as a EA representing your client, is it not the practice? It is a practice. You are representing your client. It is a very well a practice. Since it is a practice, it is not the answer. We are looking not a practice. Corresponding with the IRS on behalf of the clients, it is the practice, so not the answer. Calling the IRS to discuss a letter received by a client. So in case the client has received a letter, maybe any audit letter or any other kind of the deficiency letter, that you are supposed to pay more taxes in that case, and you're discussing your client. So client is not discussing, you are discussing on behalf of the client. This is as good as that you're practicing you're practicing before the IRS, because you are working as a representative capacity of the client. Hence, it is also going to be the practice before the IRS. So this is also practice. This is not the answer. Preparing the tax return, we have done this. If you are preparing the tax return, it is not that you are representing the client. It is not like that you are practicing before the IRS. No, that's not. Hence is the answer. Is that okay, everyone? Okay. SEM and EA is representing the FRED before the examination division of the IRS. The IRS is questioning the FRED on the Schedule C. Schedule C is, guys, basically the business income. So whatever is the business income, it comes on the Schedule C. That is listed on the 2018 tax return. When reviewing the documentation FRED provided, that the SEM discovers the income that was omitted. In that case, what is the appropriate action? Yes, you need to advise the FRED the promptly of the omission and the consequences in that case of the omission. Correct. Go back to the enrolled actuaries, have a look at it. Go back to the table, enrolled actuaries, and have a look. Can you see? Practice as the EA is limited to the representation with respect to the issues involving specifically statutory provision, mostly related to the provisions in that case, pensions in that case. Okay. Which of the following is correct? Yes, they are authorized to practice before the IRS for those issues concerning the governing of the employee retirement plans. Correct. Let's do the last one. Louis, the volunteer treasurer of the NPO and as a member of the board of directors, complies the data and fills out the annual form 990. 990 is basically for the tax exempt organizations, the way we have 80G organizations in India. Under the IRC, the Louis is not considered to be the tax return preparer because he is not compensated. Absolutely correct. Is the answer. I think we can stop it here. I hope you find the questions very easy. That should not be a problem. The questions are very, very easy. The implication, the application is very easy, isn't it? Okay, I think we'll stop it here. We'll carry forward tomorrow on this. I'll go slow initially 1 or 2 classes, then we'll scale it up, right? Thank you so much for your time, guys, and I'll see you tomorrow.